Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, August the 5th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together to take a look at the market, macro to micro, take a look at the structure market, then we drill down to our targets, our trade levels, and our hypotheses for the day. This is a subscription service, so if you are interested in coming in and checking us out, please send me email at quantumleapfutures@gmail.com. There is no website. There is no blog. This is not a commercial venture. This is retail traders operating within a self-organized learning environment. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday, Hypo 1 was a move down into the 54 to 51.75, find responsive, initiative buyers and rotate up through the range, okay, and work our way up towards the overnight high and towards that 72.75 and possibly even 77.75. Hypo 2 was a false breakout, failure to break out, a move up somewhere between the 61 and the 64, find responsive sellers and then rotate down towards the 54 and come down and chop around in balance. We actually got a little bit of both. It started out with Hypo 2, and then we came down and we left this naked VPOC down at 53.75 by one tick, rotated up, and then we got into Hypo 1, and then they left the 64 and they just came back in and we chopped around between the two key levels at 60.75, which was our microcomposite VPOC, and the range high from the prior day. So really had a balanced day. We had good kurtosis, and we really went sideways into the news this morning. Of course, this news this morning, unemployment change minus 31.2 in Canada versus 10.2 expected. Trade balance minus 3.6, expected minus 2.6. Not good news for Canada. Unemployment rate remained the same. The U.S. hourly wage 0.3 instead of 0.2. Non-farm unemployment change 255. That was a big beat. That's why we got the spike that we did. Unemployment rate slightly larger, but pretty much what it was last time. And then the trade balance was slightly heavier at minus 44.5 versus minus 42.1 billion. 10 o'clock we've got IV PMI for Canada. 3 o'clock we've got consumer credit, but that's it for news today. So each morning I like to start with a basic candlestick chart, work my way up from or down from that's the wrong one. I use my paper account on TOS just to be able to have simple charts. I use a 9 EMA and a 20 SMA, and I work my way down from the monthly. What I'm looking for is slope and separation, where the trend is being violated. You hear this every morning. We violated the trend on the monthly at the end of 15, beginning of 16, but since then we've taken it back and we went and put in new all-time highs. The new all-time Globex high, 2177.75. The RTH all-time high, 2172.75. Those should get equalized out. We've got slope and separation starting. It looks like we're getting a continuation pattern on the monthly. On the weekly, you can see that we had our week open on Sunday. Globex at 74. We popped up to the 77.75 to put that all-time high in, and then we've come back, and looks like we're going to break out of that balance to the low side. It got to 41.50, and they bottom up and now we're back up in the balance and above, just slightly above the microcomposite VPOC that is at 2160.75. We've got good slope and separation. We still do have this weekly technical gap, but it doesn't have to be closed, this week, and it doesn't look like it's going to close this week unless we have a big sell-off. Market looks very strong this morning. Going into the daily, you can see that we've been in this balance, and they tried to break it out. We came down and tried to break below the 20 SMA. Got to that 41, didn't hold, and then we've rallied the last 3 days, and we're right back up in the thick of things and above the 9 and 20, and we could see a continuation pattern here on the daily. On the intraday, you can see that we had that move down on Tuesday, and then they've worked their way back up, and now we're above the 9 and the 20. We don't have much slope, but we do have separation, and we came up and closed this naked cross here, and right now I'd say more consolidation than trend on the 4-hour. But as we move down into the 1-hour, you can see we've had this strong trend up, good slope, good separation. We just had a big push on the news, so it looks like we've got a trend going on the 1-hour to the upside. On the 30-minute, basically the same thing. We've held the trend up. We challenged it coming into the news, then they took it back, and now we've got a huge technical gap on the 30-minute. And going into the 15-minute, you can see same thing. We've got a big move up. They started to challenge the trend coming into the news and then took the news back. Got a double top going on here at the 15-minute high, hitting the the Globex high right now at 68, and then going into the 5-minute, you can see that we had this FUBAR Mr. Sneaky, but I explained that FUBAR Mr. Sneakies on news are not valid because they're revaluing the market on the news, plus the fact that the Mr. Sneaky itself came back and tested the 9 and the 20. You don't want to see that. You want to see the Mr. Sneaky as an island, and leave the gap alone. So this looks like it's got strength right now. The one thing we do have in our favor right now is we do have that naked VPOC at 64.50, which I think is going to be attractive on the RTH open. Going and looking, but the trend itself on the shorter time frames are all up right now. Going to the structure, need this right now. Is that okay? So we're right back into this balance, and now I've included yesterday. We had a doji yesterday. We talked about this yesterday. The fact that we had a FUBAR on Tuesday and a Mr. Sneaky on the daily. Now we get a doji. And now we're sitting up in the upper distribution here, trading around that 67. The value area high for the microcomposite is 67.75. You want to pay attention to that. If we get above that, look for them to take out that 68 Globex high and push into the 72s. But you're getting some a pretty nice bell curve here as it's filling in, and we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days now of balance in this area, and we are going to break away from here. We just do not know which way it's going to be yet. And I doubt that today is going to be a big breakout day coming into Friday, but it could. You never know. Key levels to watch right now, the 65.50. We get below 65.50. Look for that 64.50 to get taken out and to move back down into the microcomposite VPOC. The microcomposite VPOC is 59.50. 50 now. A little bit in the last 3 days, 59.75, but we've got a slight shift from the 60. It was up here at 60.75. It's moved down with the action that we did fighting that high from yesterday. We shifted the overall microcomposite down. And then the key line in the sand is going to shift up from the 38 and a quarter up to 49 and a quarter, below 49 and a quarter. Look for 46.50 and a push down into this 38. I do not think the next test down to the 41.50 is going to hold. We went down there once. I don't think we're going to hold it the next time. So I'm shifting my key line in the sand from 38 and a quarter up into the warning line at 49 and a quarter, and that becomes the key line in the sand. 72.75 is our key line in the sand above us. Anything above 72.75, I'm looking for them to go up and take out that unequalized high Globex at 77.75. All right, so it's still early, so it's hard to say whether our high is in on the Globex, but you know, we're only trading a point away from it. Our overnight low is 59 and a quarter, which is just under the naked VPOC and just above the close. Boy, I got my close wrong. 21.59. Okay, and you know, we've got a LVN that was created, just happens to be at that key CLVN at 65.50. So 65.50 is going to be a key trade level for us today. The VPOC is not likely to shift now. It is at 64.50, sitting right on top of that naked VPOC with the naked close just above it from Friday. Or was it Friday or Tuesday? Where was that from? Friday. Yeah, Friday. Okay, and then our overnight high, I'll put it in right now, but it's not likely to hold. We've got a whole half hour to go, but I've got to put it in so we can do our homework. All right, so our 20-period ATR is running on the daily at 17.39. So off of the bottom of 21.59 and a quarter, 17.39. Our upside ATR target is 21.7675, so just under that all-time Globex high. So we have very easily extension up into equalizing that high today if we continue to hold above the prior day range. Off of the 21.68 and a quarter currently, the downside ATR target is 21.51. Come on. Okay, and that's about all the information that we need off of the Globex, so let's get rid of that. Let's expand this out. So 59, I mean, this is you know, key. So I've got 65.50 as one of my key trade levels. Obviously, I'm going to use 63.50 as well. Actually, I'm going to use 63 and a quarter. And the reason I'm going to use 63 and a quarter is on that news. We were talking about how to trade the news a little bit earlier, and you had your news come out, and we had our first push up. Now it's wave one. You come down wave two. I got in at 64 and a quarter, and I sorry, 64.75, and I wrote it up into 67. That's CHVN at 67. But you can see that we've got this weak double bottom, local double bottom here at 63.25. So instead of using the range high, I'm just going to come down one tick and use 63.75. And then below that, we've got the 61.25. I really think if we get inside of the prior day range, we're going to come down into at least the 60.75 and visit the prior microcomposite VPOC. But with so much confluence at the 59.75, you get the overnight low, you've got the close, you've got the naked VPOC, you've got the microcomposite VPOC, that if we get inside of the range and we don't bounce right here, then this is going to be a really nice trade. So be prepared for it. And then below you've got we had a very tight value area. So I would expect with the kurtosis that we have here that we will travel through and get an 80% destination trade to the downside, the trip through value. And then below that, there really isn't anything to guide us. We've got 53.50. There is a little bit of a, come on. I don't know why this one, there we go. A little bit of a LVN here at 56. I'm going to use it. And then, obviously, if we get down below value, I'm looking for them to come down and take out this naked VPOC. We left we missed this naked VPOC 2 days ago by 2 ticks, and yesterday we missed this VPOC by 1 tick. That's rare, and we really balanced out in this microcomposite. And then below, there isn't really anything until we get to that 50.25, but I'm really using the 49.25, and it becomes our new key line in the sand. And then below that, we've got the 47, 46.50. I'm actually going to take this. Well, yeah, I'm going to leave it there. No, I'm not. It's a range. It's a valid trade level, but because we've got the 46.50 down here, and then the 45.50, I think you'll dip through it. I don't think it would be much of a hold. And then we've got the 38.25, which is our secondary extended key line in the sand. I don't think we're going to get there today. All right. Oops. All right, those are all our levels to the downside. To the upside, we know what our levels are. We've got those measured moves. So let's talk about hypotheses. We're going to be opening auction out of range. This should be 68.25. We're going to be opening auction out of range. So we have to look for open auction out of range, or an open drive, or open test drive. Open test drive will look like a move to take out the overnight high, a move to test the 64.50 or the 63.50, and then a push up into into new highs. That's what an open drive will look like. I'm not saying we're going to get that. An open drive will be initiative buyer stepping in and just ripping us up through into that 72.75, chop around there, and then push through. But I don't think we're going to see an open drive. I don't think we're going to see an open. I think we'd either see an open test drive or a open auction in range. Open auction in range is my main hypothesis. A move down to test the 63.25, or 61.25, and then rotate up through, maybe even come down. I mean, basically the first, I'm expecting open auction, a push down to take out the 64.50. That's the main part of this. Whether we continue down into the range and how far we get into the range, I'm not sure. But essentially at some point in time, I'm expecting a rotation back up through and pushing to that 72.75. My main target today, if we dip in or we don't dip in to the prior day range, is a move to 72.75 and a new RTH high today. And I'm targeting the 74.25, but I'm thinking we could see the 77.50. So hypo 1 is a move down. How far we move down, I don't know, but somewhere inside of the range or inside of value, and then we find initiative buyers and move ourselves up into that 72 as the main, 72.75 as the main target. That type of 1. Hypo 2 is an open auction or an open drive, open auction out of range or an open drive, a push up and a failure to make a new high at 72.75 and a rotation down through into 59.75 being our main target below, chop in here, and then get a late day probe down into the 54 and essentially take out these 3 naked deepoks. So open auction, outer range, or open drive, a push up, failure to make a new high, so somewhere failure between the 68.25 and 72.75, responsive sellers coming in and coming down and taking out these 3 naked deepoks. That is hypo 2. Hypo 3 is an open drive, a push up into 72, chop up here, push up into the 77 and go make a new high and come up into this measured move up here at 81.75 and close on the highs, drift up into the weekly close. And then hypo 4 is a push down into value and then fail, push right through the range and through that naked VPOC, come down, test the 49.25, fail, and push down through and come down in the 38 and have a big take back day down to test the key line in the sand with maybe a push down into 33.75. It's a low probability play, but that's why we have multiple hypos, is we know what to look for and how to recognize it just in case it happens. So those are my 4 main hypotheses. We're currently right now trading at 66.75. The Keltner center line is our key trade level at 65.50. Anything below that, again, I think it's a very high probability we take out that 64.50 regardless. That's why it's in multiple hypos. A move down below the Keltner line takes us center Keltner line, and a move down to the lower Keltner line takes us down into that 60 area. It's likely to be 50, 59, 50, 59.25 by the time we get there. I'm not going to do gold today. Just running a little bit late because there was a lot to talk about. So I'm going to close this on this note. It's Friday. Don't get stubborn. Take small losses. Okay, take your profit, accordingly, and don't go into the weekend with a losing day. It's terrible as traders to have that psychology hanging over your head for the full weekend. Anyway, that's going to complete today's session. As always, trade well, trade safe, and we'll catch you on the flip side.